Wizards. Welcome to episode 44 of Wizard Thursdays. So, I hope you guys have had an incredible New Year so far, an incredible Christmas, and also settling in to 2020 incredibly well. It's actually my first time just to kind of, break the silence a little bit on why I've been MIA. In short terms, not only am I incredibly ill and have I just absolutely crashed, there's been a lot that's been going on behind the scenes that I'm just trying to juggle and kind of, balance with the work that's going on over here as well. So a lot of personal life stuff, a lot of things that have been going on in 2019 that are starting to, catch up on me and finally have a little bit of an effect. But regardless, I'm sitting there and I'm getting through it, and I'm just going through the Wizards Worldwide chat. I'm going through my DMs and my messages, and the absolute sheer support that is coming from you guys is incredible. Absolutely incredible. Even just shouting there has made my voice hurt. But what you guys are doing in terms of support and understanding, and just going through Wizards Worldwide chat and watching how even when I'm not there to run the fortress, you guys are taking over, helping each other, guiding each other every step of the way. It's just amazing to see, and it's just making me so happy. So if anything, just thank you guys so much for the support. Thank you for absolutely understanding what's going on in the behind the scenes right now, and I promise you I'm going to be back in form soon. The same way I teach the principles in the course is very simple. I say if the optimal mindset is not there, I do not trade. And unfortunately, I've had a very damaged mindset moving into the new years. I try and recalculate and go into a fresh new decade. So it would be incredibly unfair for me to come in, provide analysis when I'm not in the correct state of mind myself, which in return will only affect you guys negatively. So for the reason not doing the Wizard Wednesdays yesterday's as well, just to continue the streak of L's, so to speak, the laptop that I've been using for the entirety of 2019, that is to make the promotional videos, all of the videos you've seen, the editings, the charts, the analysis, the Wizard Wednesdays, the videos, the course content, a lot of it has been edited and made on that laptop for almost the entire year. So inevitably that thing did just give way and start blowing up, and it's not even recording right now, so I cannot physically record or do anything on that laptop. So until I get a new one, I was very fortunate to have my girlfriend come around this morning just to deliver her laptop to very quickly allow me to make this video. So all in all, we are now making some positive steps forward. My iMac has been taken by another team member. He basically used it for the entirety of 2019 as well. So I'll be collecting that from Birmingham soon, and then we could have a much larger screen surface, much larger chart layout, which of course is crucial and optimal when it comes to trading. I've always said this to absolutely everyone. When it comes to trading, when it comes to looking at your charts, remember you should always be using TradingView only for your chart setups, but more importantly, try and opt for the biggest screen size possible, because this not only allows a much larger non-compressed version of the charts. I'm using a 13-inch MacBook right now, but obviously an iMac or a 15-inch MacBook would be bigger and more optimal. It still does the job, but what you really want is much larger enlarged candles like this, but also showing the entire chart like this at the same time as well. And that's what really allows you to optimize your trading skill set. And that's actually something that I probably should have mentioned in the course. The size of your screen is absolutely crucial. So using my iMac is absolutely crucial, and I'll be collecting that very soon as well to ensure you guys are receiving the best service and stream of quality possible. So I haven't, by the way, just to mention as well, I have not really checked these charts since Christmas properly. I've only just seen everything now. I haven't moved anything, nothing's been changed. The ether chart, as you can see, the Fibonacci, absolute perfection. Apologize, that's the coffee machine in the background refreshing itself. The LTC key level over here at $44, cannot believe how precise these levels are. But this also shows why you can allow yourself to take a break from the market. The majority and the main move has come through. Now, I know a lot of you wanted to go straight in for the shorts, but the truth is, guys, the sheer size of the moves that have been captured from here to here should mean you are in no rush to actually come back through and try and recapture any trades. We should always express gratitude, capture the move that's been caught, and then wait for the next formation to move. Because this is no real reversal signal, I know it's pulling back down now. If anything, we should be awaiting and identifying potential retest, for example, but we're going to be getting into all of that now. Because I'm fresh, we're also going in fresh, and it gives you guys a perspective that's a bit different to what you've been witnessing. Because remember, over Christmas in particular, no doubt you guys have just been staring at those charts endlessly, day in and day out. So you're obviously glued to the charts, you've been seeing all the wacky movements, whereas for me, I've just jumped on now and kind of gone, whoa, okay, I haven't moved any levels, but this is a work of art that I'm witnessing right now. So BTC, without saying anything else, should be the first target here to look at, and understanding the overall bigger picture. So just quickly looking at the trendline retest that was covered as well, very prior to the breakout of the trendline over here, rejections, taps this zone once again in some element of being a head and shoulders formation. You can see the shoulders, you can see the head, and you can see the shoulders here. Now if we were to whip up the old Fibonacci tool, we also have this bit of action going on here. So you've got, no matter how you do this, really, this should work out quite nicely to being a fib. That also works out as well, but we want to go from the wicks to the wicks for the real juicy movements on this particular setup. So as you can see, the A, the B, the C, multiple confluences at this particular region. You've got the 61.8, you've got the trendline retest, you've got the zone retest, and you've got a head and shoulders. So that's 4 confluences from that setup alone. Not to mention the descending wicks over here causing the trend line to go down with the resistance trend line. There was all kinds of different movements, but obviously with the lack of liquidity during the Christmas period, it just was not worth trying to actively trade and continuously provide updates, because what was the point? The market was barely moving, and many people would have just been entering prematurely anyway. So it's best to kind of wait for the moves to come through, the moves that were captured. You know, some people even caught the gold trade that I gave away. Now my girlfriend should have this open. Yes, she does. And yeah, this was given. This is actually her setup, her charts, her analysis, but I believe I gave this from around this zone here. And I'm going to give you a little insight into this gold trade as well, and why I actually gave this away. Now, everyone would have seen this huge candle here as a huge reversal for a bearish reversal, but I saw one simple thing, which was the principles provided within the Wizard course content as well, and that's a break of resistance. Now remember, the prior high price actually broke through and breached this region, and if anything, this huge wick that was shown here on the daily was nothing more than a suggestion that the buying power here managed to push the candle all the way up. Now that for me suggested there was a huge amount of buying momentum at this particular region. If we had seen such a reversal maybe close bearish, I would have understood, but it not only closed bullish, but it also showed how much momentum pushed it higher. So when it actually closed all the way back down, this simply told me we've now officially breached this resistance level, we've tapped a crucial zone here, and then the pullback was nothing more than a retest of this zone, as you can see on the 4 hour, before actually elevating and exploding higher. Now don't forget, I'm no political expert, and if any of you know me, I do not even watch the news, I do not read newspapers, and I have no plan to do so. But with everything that's going on now with Trump, Iran, and what could potentially be happening elsewhere in the world, we know that when a bomb goes off, the price of gold goes higher. The price of oil, let's go to the daily. Boom, 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 another zone there, absolutely beautiful. My girlfriend's getting pretty good at this analysis stuff as well. You can see over here that the rejections from this zone, I wouldn't be surprised, guys, if another bomb goes off, that we are going to start seeing oil elevate into that $70 to $80 per barrel region. And then of course gold, looking at per ounce, I mean, we could easily see that 1700 figure over there. All kinds of different things. Now I know I do not normally include this stuff, it's a very bearish weekly candle at present as well. Now all that tells me is we have a potential long opportunity coming up on this pair. Now I will not always be covering this, but you have to realize that here's what could be happening to confluence with all of this analysis that's coming through. So first things first, you've got the A, the B, potential C formation at around 1500, which obviously also aligns with the last prior broken level, so we could easily be coming back down to reject this level once again. But what's more important to me is this trend line here alongside this broken resistance trend line, which hasn't been retested yet. These are the exact same course principles I've been teaching you. I'm just showing you how I can actually predict technical analysis, well, technically predict fundamental analysis. And now we know, this is a bit weird and a bit crazy, but if you look at this and the rejection lower, if we do come in and fulfill this reversal over here, we've also fulfilled the 78.6, which is a counter trend, broken trend line retest. You've got the main trend line over here, you've got 3 confluences, plus you've got the support zone, which has been highlighted. Very nice of her to highlight these as well, plus the 78.6. So all kinds of different confluences. Now, what are the chances that once we've fulfilled this level, another bomb eventually goes off, or someone gets killed? This is how it works. This is all fixed. The whole game is rigged. Now, although it's easy to identify technical analysis, you have to remember the technicals already have the fundamentals embedded within them, and that's how insider trading occurs. It's no coincidence that the price started moving before the bombs went off. That is no coincidence whatsoever. So do take this into consideration, because with all this political stuff that's going on, we may start seeing more of a collaboration and a combination with the commodities and BTC, because obviously, I saw an article anyway, Iranians are even opting for BTC as a much more safer alternative of currency right now because of everything that's going on politically in the world. So do take that into consideration. If you look at the explosion and the reversal, let's go to the weekly here. It's pretty much mimicking the upside push that we saw on BTC. This all happened exactly around the time the bomb started going off. So put two and two together, it's not very hard to see right now that with all of these wars that are potentially about to arise, I know Instagram's just full of World War III memes, which obviously shows we may not be taking this as seriously as it should be. But if you look at this realistically, this has shown that during political devastation and during global devastation and war, BTC is being opted for as a safer route of, I guess you could say, a store of value technically now. It's actually held its true purpose during the time people need it the most. So understanding how gold could be potentially elevating. Remember, all of the technical analysis during these political moments as well, where war is erupting, even the overall bigger picture can shift dramatically. Maybe not in the medium term, but for the short term, there could be a lot of surprises. So whilst we do await, remember, look at the weekly perspective here now. This is where things get good because we've fulfilled the Fibonacci targets, and despite breaking a little bit higher, we've just simply gone to the 8,000 zone that I predicted and I called for all of you guys. We may have spiked into the 8.4 region, but guess what? The candle bodies are now closing exactly in line, or at least within the regions of where these candle bodies were. So we've broken through support of $8,000. We've come back to retest. Now, for all we know, if we do see another bomb go off or another big political explosion, well, here's exactly what's going to happen. You're going to see the extra push higher. I'm going to show you the potential setup for this in a second. Remember, this is all fresh. I'm doing this right now, but I can see it very clearly now because I haven't been focused on anything else. And this is why recharging your batteries is essentially good. Looking at around $9,000. So, okay, if we do see a closure, first thing I see over here is some form of trend line that's been broken. So going back to the daily very quickly, as you can see over here, the first thing I can understand is this. Boom. We've got this little zone here that we've already marked anyway. That was our prior breakout zone. All we need to do is wait for a pullback to this region and we could potentially be going long once again. This time elevating to the $9,000 region up to the $9,400 region. Now look at this. This still aligns with the prior support and resistance levels. This also aligns with our trend line here. Now imagine that once this move is complete, we see that movement up to here and then it slams down to guess where? Below the 6K region and to our 5K region to fulfill the trend line. Then from there onwards, we explode higher when potentially World War III actually erupts. So hopefully you can understand the bias here. And the truth is, because we've actually breached this resistance zone as well, it is showing a lot of weakness. So all we could be seeing now is some manipulation to dump this down. Remember, there's many ways to draw this. I drew that from the weekly, but if you want to extend that a little lower, we can start looking at extensions into that 7.2 to even 7.150 region, or even 7,000. Just cater for all of the wick activity over here. So it's very simple. This is what we would potentially be looking at around this zone. Now remember, slippage as well. There is still not a lot of liquidity in the market. So do not put it precisely at a certain level because it could wipe you out very easily. But a nice RR ratio on this setup, to be honest with you, it's not the greatest. But let's say it dips a little lower and it taps here, then you're absolutely laughing. Wicks below there. TP up to there, you're looking at around a 4 to 2 or even a 4 to 0 RR depending on your stop loss setup. So it's definitely something to pay attention to, not to mention the closure here. So if we do see that closure, the following weekly candle will either be a huge reversal and close here, or it'll be a huge reversal, spike, but then end up closing all the way back up here. Just as you've seen here with many predicaments before, where the candle goes up, closes, spikes, which will be the wick fishing down to here once again, and then boom. Not to mention, if you do just start drawing some descending wicks, do apologize, let's make that later. Remind me tomorrow. There we go. So you could even be seeing that final wick just dropping into that 6-8 region or just dipping a little bit lower. So we need to be a bit careful of manipulation, but the overall agenda does remain exactly the same, to be honest with you. We're still looking at, from a monthly perspective as well, I mean, if you look at this, let me just get rid of all this mess now. You've got the setup, you know what's going on. Get rid of that. There's a 3-pin pattern, 1, 2, 3. I'll keep that zone, I'll keep that zone. The bigger picture, obviously from the A to the B to the C, the extensions still align exactly with this region as well. So we can get rid of that, keep it nice and clean. But all in all, you can just see here, you see how this has happened, how it's pushed lower. You've seen some nice reversal signals. You've seen a quick spike higher, maybe fulfilling this region. Look at this on the monthly. The $8,350 region where 2 candle bodies closed is exactly where we've spiked. So we may just be seeing a very short-lived movement, not to mention from a monthly perspective as well. If you do go from a body to body angle, you've tapped the 61.8, maybe we will just tap $9,000 and then push lower. So let's look and wait for a pullback first, another short-term long opportunity up to these regions, and look at exactly where these extensions lie now. All kinds of different confluences really kicking in here. So XRP was one of the bigger movers, and again, exactly as stated, we blasted through the roof, fulfilling that 78.6 fulfillment region over here. Now look at that wick yet again, and look at where it spiked. So we've broken through, it came and spiked the prior support levels over here, turned resistance, 78.6 on the weekly. We've closed back below, which does suggest, just like BTC, there could be another push higher. As you can see here, slam lower, quickly fulfill these wick regions, come back up and see some proper candle body closures around 22 to 22.5 cents before rolling over and inevitably falling into the 16 cents region as well. So it's very simple stuff that we're seeing right now. Very clean price action. I'm absolutely loving what's going on in these charts right now. It's just been working out beautifully well. And again, it's very simple stuff. I mean, if you look at this from this perspective as well, XRP loves these sort of trend lines. It just respects them very well. Boom, boom, boom. We can see how well that came through. So all I would do in this particular scenario, from the very high to the low, maybe just plot this over here. And as you can see, if you're not using this region, push it all the way down to cater for the extension and the manipulation. Clearly the 18.5 cents region has been phenomenally well as support. We've also got a little cheeky trend line over here as well. So now that we've broken this zone, it may just slam down, fulfill this region, and we enter long from here again. And what a coincidence that 24 cents and 25 to 26 cents is also where our next zone is. So it could be the final movement higher. Going from a weekly perspective now, let's see how this works out with the next high to low. So let me just mark this over here, mark that over there, and there we have it, around the 61.8% retracement at 26 cents. Nice alignment. Obviously may not go down to those levels, and I truly hope it does not go down to those levels, but hopefully you can see how it does go quite nicely hand in hand with what's actually going on. So just be prepared for a retest regardless of these Fibonacci retracements. We also have this zone over here as well, guys, which obviously has been broken. So inevitably, at the bare minimum, we're going to come and tap 20 cents just to retest it. So we're almost there, and just be prepared for what could be a very potential large upside continuation to make people believe it's the potential bull run. Now, LTC, as you guys know, this is an absolute mess. I really do not know what's going on with this, and I do not want to know what's going on with this. There's no real interest in this pair right now. But if we do understand the simple analogy of risk to reward and support and resistance and supply and demand, you can see if I duplicate this and drag it up to there, exactly what's happened there. The break, the retest, the break, the retest, which could also be that same movement pushing us up to around $55 now. We fulfilled the first target of $40 to $44. So imagine now this just breaks through, rejects over here, slams into the $30 region, and then of course the main market reversal begins. So there's not much to really say on this right now, except the fact of how perfect the levels I gave you were in terms of breaking above, breaching this region, tapping after spiking higher. But I do not believe this will actually maintain this level just yet. Just be careful though. We could be seeing a potential 3-pin pattern in terms of 1, 2, 3. So it may very well just come in, tap $44.50 and blow higher. But I do believe before we see that, it may just mimic that XRP and BTC movement first. But as you can see, in comparison to the other charts, this is a lot more erratic, a lot more volatile. But If you do want to kind of look at this from this perspective, it's very hard to draw because there's so many different ways to do it. You could look at it this way as well, and this is the closest way to see it in comparison and similarity to the likes of XRP and BTC. So from the very low, not from here this time, from the A to the B, the C extension's there, the DXT extension's also there as well. Nice confluences with prior levels of support and resistance. We'll get rid of that as well. I don't even want this present. Looking at a retest of here to here, and then boom, fly up to $52 to $55, slam back down, fulfill 30 and move forward. Now, looking at this chart, it may look a bit messy, but my goodness, was that Fibonacci a work of art. A, B, C, perfect tap of the 78.6, blew through our zone after rejecting it for so long. When we did break through, you notice this, just like gold, exactly like gold. Look at that. Was it the weekly or no, it's the daily? Where was it? It was here. So just over here, like on gold, where we pushed up higher, that's exactly what's happened on Ether. We pushed up higher, we breached the zone, showing the momentum. The candle came back down. Look at the 4 hour. The candle breached. We came back and rejected perfectly, the same zone I've had marked out for ages. And then we blew through the roof. This literally mimicked gold's movement. I mean, look at that. Broke through, slammed straight up, and then it came through, rejected. Remember the same principles I taught you. Look at this box that my girlfriend plotted. The first wick that comes through, the candle bodies did not breach this wick, remained within the zone, spiked higher, granted everyone would have got wiped out, and then bang, it came all the way back down. But obviously, I would never short from here anyway, knowing that the round number 1600 is just there anyway. So the same theory applies. We've seen the spike, just how gold had the spike as well. We fulfilled the Fibonacci, remained within the boundaries of our support, and from a weekly perspective, well, guess what? Candle body closures are there. So you've broken through the support here. We finally came back to retest it. We've also broken this trend line here as well. So it's very obvious what is likely going to happen next. Let's drag this all the way up to the wick. Let's get rid of this now that this has been fulfilled. We've got this region over here anyway. That's gone. That's gone. Keep it nice and clean. Let's drag this over there. Now we can start being a bit more optimistic. Now, you obviously, just like any other pair, you can mark it from there as well. But the main key here is to start catering for manipulation, because with everything that's going on politically, the markets are going to be erratic and it's a very risky time to be trading. So we need to be putting absolute best possible scenarios in our favor. Trend line here as well. We've got a crossing point. Just be careful of a spike. We may not see 123, 125, but 130 to $128 could be very likely. So pull back down to here, rejecting. If you want to just drag that out a little further, you can do so, or even do it from the body. There are so many ways to plot this right now because of manipulation. We have to be careful. So I'll be opting more for this sort of sweet spot over here, just being very careful. And just judging from this wick over here, $130 seems too low. Dragging it from there also seems too low for me, so just push it there just to be safe. But all in all, the same scenario applies, guys. Look at the extensions, $156, 156.5, exactly with the prior levels, and conveniently 164 to 167.5, again our prior zone. Now what happens when that movement is fulfilled? Well, obviously it caters for the next movement lower, because when you drag it from around here to there approximately, it starts aligning with this support zone. If you want to just be a bit cheeky and drag that from the body, then guess what? It all still aligns very nicely. So we're all looking, and all eyes are potentially on that $162 to around $170 region, where obviously we slam down lower. Remember, I said Ether will likely hit the $100 region before reversing to the upside and creating the true catastrophic bull run and parabolic run. Not to mention, of course, the channel that's forming down here as well. Boom, reverse, slam down, fulfill these regions and reverse. So all in all, everything I've been calling since 2019 is finally coming through to the absolute T. You're finally seeing the movements. We've had some very tedious periods in the market, a huge amount of illiquidity, but my goodness, guys, is every single call just working out beautifully right now. So just be patient, do not be greedy, let the market come to you. I've given you the setups for this in particular as well. Just wait for those retests, wait for confirmations, do not short. There's no point going from one trade to another, because realistically, we did not anticipate this short yet. We did not anticipate any levels, and and a lot of you jumped into trades. I know a lot of people, got a bit angry that I wasn't present, but have been dealing with some things on the side. And at the end of the day, I can't take responsibility for trades that I have not called. I simply called the long trades, and I cannot really be held responsible for trades I did not call myself. So I just wanted to throw that out there, that if you are taking trades off your own will, just understand that I wouldn't have taken those trades myself, and I haven't called them for a reason. If there really was an opportunity, and I did say this anyway in the Wizard chat as well, there were no trade opportunities. I even knew, excuse me, without even looking at the charts, that there were not going to be any trade setups. And looking now, I know the trade setups are formed, but there were no present trades running. So hopefully this has been a nice refresher. Again, pay attention to oil as well. Pay attention to gold, because we're going to see a fairly sharp pullback, I believe, to at least around 1520, hopefully even dipping into the 1480 region as a big surprise. And then from there, you're going to see a very large parabolic rally, I believe, as you start seeing political tensions rise once again. So I hope you guys have enjoyed Wizard Thursdays, and I hope it's been insightful. I hope it's provided more clarity on the market. And again, guys, just thank you for the continuous support. I may be a bit ad hoc here and there whilst I try and just get back on my feet, get things solved from my end, get all the personal issues resolved, but I'll be back in full swing very soon. And thank you again for all the support. And just remember, no matter what happens, you guys are the priority, and I'm here for you guys every single step of the way, no matter what happens. So have a good day, have a good Thursday. The weekend's coming up, and I'll be in that Wizard chat very soon as well, with even more updates when hopefully the market starts pulling back in our favor.